I am presenting my book review as an audio and video essay to sort of help you go through it a little bit quicker. So I reviewed Machine Learning for Algorithmic Trading by Stefan Jansen, and the key thesis and key arguments that I found valuable, as well as that I did not agree with him, is that one, I agree with him that automation and machine learning are enhancing trading efficiency by automating routine tasks and improving decision-making processes. It's become a lot quicker for people to execute a buy or sell order because of machine learning. Signals that are generated by machine learning can quickly be executed by maybe almost a minute or a milliseconds quicker than what human clicking of buttons takes. In terms of machine learning and risk management, machine learning models enable better risk management because they take away the human emotion of entering and exiting trades or closing positions when losses are occurred or faced by traders. He makes a really strong case here, unlike in automation where I think he does mirror real world workflow, but it is very complicated and very difficult for you to just casually read the book and add it to your reading list if you're not looking to do major experimental work on him. In terms of another area that he makes a solid argument is that predictive analytics has advanced algorithms that can analyze historical data to identify patterns and forecast market movements confidently. I agree with him here fully, and I think this is very valuable that predictive analytics is becoming a lot better as data is now becoming the core driver of performance metrics measuring and how models can be trained and utilized. The key insights from algorithmic trading in machine learning so far in my read is that data utilization emphasizes the importance of leveraging historical data for predictive analysis in trading strategies. Modern investing, as it stands right now, is reliant on data. You can see every large hedge fund is utilizing data to make their final decisions whether to buy or sell an asset. And that is actually important in terms of how they can manage their risk. So it explores effective risk management techniques that can complement machine learning approaches in trading scenarios. You can simulate what can happen when something changes in terms of the volatility. For example, when we're looking at the correlation between the VIX and the S&P 500, we can easily simulate what or stress test our portfolio based on that. Further, it is much easier to select a model from machine learning based on their performances. What score are you giving them, and including decision trees and neural networks, you can create better and more efficient models from the data we collect. So in summary, the tactical blueprint of the book is it focuses on collecting and cleaning market data and how to build and test predictive models. It also has a set of rules in terms of research and execution for automated entries and exits, and also tackles performance tracking and adjusting quickly in terms of market turmoil. And further, it also emphasizes some areas where you can reduce risk or improving returns, which is very important for companies seeking alpha. My main critiques of this book so far, why I'm not recommending it as a casual read, is that one, ensuring high quality data, relevant data is crucial for effective machine learning and model training and performance. Therefore, the data sources that he used, for example, Zipline and Quando, are not meeting new demand. They're a little bit far behind. It's like far back as 2018 or 2019. And integrating this into maybe Microsoft Azure is a little bit more difficult because Quando is currently out of business and you have to directly link yourself with the NASDAQ. Another critique I have is the book is not beginner friendly. Majority of the code that is there is not easy for people who do not have prior Python and machine learning expertise to just get the book, read it, and then implement it directly into your business. So you could end up resulting with issues such as model overfitting. So this can occur when models are excessively complex, and this is exactly what this book has. It has really complicated models, and some of the models he uses slightly more complex to install and run on a normal PC. I had a difficulty getting some of the Python code working, and then also the data sources that he's using are very expensive. I know data is the most important commodity right now, but if you're looking to just get people informed about machine learning in general, I think giving an alternative to like the NASDAQ data source is actually worthwhile investment that I think you could have looked into before publishing it. So, in conclusion, I do not recommend reading this book for strategic reading because overall it's like a manuscript of what should be done when building algorithms and not necessarily like a strategic book for you to not necessarily a strategic book for you to read as a casual read to help you with just general understanding of machine learning. I would, however, make a